Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't. Just remember the disclaimer nothing should be construed as financial investment advice. Just my opinions, my thoughts on the market. Read more on disclaimer below. And yeah, it's been a while since I've done a video. And the main reason I haven't been able to do a video, just mainly family obligations. My wife and I both work and take care of the kid. Luckily, I have mostly telework. I mean, starting next year, I have to go in office twice a year, and then the year after that, I'll be out. I'll be gone forever from the U.S. probably, hopefully. Uh, and yeah, luckily my wife has a is doesn't have to work in office, fully remote, so everyone asks about nanny or childcare. It's like, have you seen some of those horror stories? I'm not subjecting my kids to that. So anyway, just doing a lot of things, and yeah, I finally got a break. Good break. I mean, so I'll be free for 2 weeks more, and then who knows? I'll try to do videos as much as I can, but I just haven't been able. So there's so much I wanted to talk about, but I have not been able to. So we'll get into this and then we'll talk about gold and silver and other things. So look at this Goodwill sales. I saw this on LinkedIn, but I didn't really want to go. Goodwill sales have soared. That's 37% more than the previous high set. This is not 37% more from last year, but 37% more than the previous high. Now they're saying it's because of a makeover and they're making it trendy or not. No, once again, the elites, the smart people, the people on top, the analysts, the business class, they're idiots and they don't get it. No, the reason Goodwill is soaring is because people can't afford to shop at regular stores, and they can't afford to buy their clothes at Walmart. And I'm not talking about the poor, I'm talking about the rich. A lot of them, the upper class, they can't afford to shop at Walmart either in America. So that's what's happening. And a lot of people like to show like how dumb the analyst class is. They blame inflation on money printing. I was like, yeah, if you want your basic bitch Austrian, analysis, go to Mises's site, but that has no bearing on reality. You got to remember, Austrian economics is just a bunch of college professors that have never lived in the real world. The main reason is over the last 4 or 5 years, we've let in whole countries of people in. The only way to really get inflation is to get them out, cancel visa programs, and do actual deportations, which Trump isn't doing. And then you get these people, you have less demand and prices and rents and everything will drop. And if you don't believe me, look at Poland. Poland, same thing. Prices are a lot higher. They didn't really print money like we did. But what did they do? They let in basically the Ukrainian. And so they have all these people coming up, and, Poland does not have, and a lot of them are actually very rich Ukrainians. Poland housing market source. Look at this. Polish housing market experienced significant price surges. Now, what's happening? I just know this from inside. Baseball uh, is because my wife lives there. Is a lot of them are pricing out the local, so housing affordability is very bad. And what Poland needs to do is get these people out of there. And that's what Poland has to do. I don't know if they're going to do it. Yeah, so it's the reason why. It's the same reason Poland's housing affordability is poor. Is because they let all these people in. Now they have to get them out. And same thing with the U.S. And so, anyway, that's what's happening. And Poland's currency is the zloty. So I think money printing did attribute to it, but we've been printing money for the last basically since '08. And nothing has soared like it did the last 4 years. And the main reason is we did print money, but it's because of mass. When you bring in a mass amount of people, it drives up prices and it prices out the locals. It's not good. So anyway, let's go to AI, the biggest bubble of all time, probably. AI companies, I saw this from, but I wanted to get actually more. And this is from AI itself, so you can't say it's not objective. Big tech companies are indeed issuing unprecedented amounts of debt to fund massive infrastructure in the AI race. So major tech firms raised about 108 billion in 2025 alone, three times their average borrowing in years. They used to fund their capture with free cash flow, but now they're doing it through debt. So these companies are not going to be free cash flowing anymore. And we're seeing AI will be the fall of big tech. Greed is what's going to destroy big tech. Uh, Look at this. To maintain healthy balance sheets, they're using complex financial maneuvers such as special purpose vehicles. And it's not on their balance sheet, but through Meta, it's still on the hook for payment. So they're having a lot of off balance sheet items, and that's why the balance sheet looks nice because they're doing a lot of this debt and destruction of big tech. It's not on their balance sheet. They're just putting it on an off balance sheet item. So and then look at this. This is AI. This isn't so Nvidia invest in AI startup, which uses that money to buy investor chips to artificially inflate demand. Inflate demand. So you can see what AI is doing, how bad it is, and everything else. So if I were running things, I would let AI die. I don't care if we lose that race to China or not. They can be a technocratic nightmare. Doesn't mean we have to be. This I just felt was interesting. I said in my podcast, the only thing I'm really buying for investment is oil and Canada to scrap some climate rules seeking to boost for Alberta to Pacific oil. So they're scrapping the climate change rules, which is good. I mean, they should get rid of all of them. I mean, I'm an environmentalist. I'm not, but I mean, I'm not, climate change doesn't exist, but we do need clean water, clean among everything. Those rules are helpful, but the climate change, no. No. So, I mean, Canada, look, their economy's horrible. And at the end of the day, they're saying, hey, we need to get jobs going. And one way build, and not only that, they saw how unfriendly the United States has been since Donald Trump. So they're thinking, well, we need more than one customer. The US used to be old reliable, and now they're not. So boosts from Alberta to the Pacific. So they're going to be selling to Asia. And I mean, Japan is dependent on oil, so that would be a good partnership. They could sell to China, among others. So yeah, we're good for Canada. More on the economy, seasonal hire workers. That's been horrible. The seasonal, everywhere I go is like they're not working. Usual holiday hiring spree appears muted. I haven't read this. As you can tell, this was a little bit older, November 38. Fewer may be able to pick up seasonal work. Yeah, as layoffs announcements make waves, the unemployment rate creeps up. So I think it's going to be a bad Christmas. The thing is, they don't, in the retail sales numbers, they don't count inflation. So it might actually be good. So on paper. So I can't really make a prediction with certainty on that. So they do expect strong consumer spending to persist during the holiday season, but plans to bring on extra staff for the lowest levels in 15 years. So yeah, and look at this. To show how bad the economy, interest in seasonal work remains high. It's actually 27% more at the end of than it was earlier. And that's because Americans don't have jobs. So if someone's, oh yeah, I need to, let's say you exhaust your unemployment benefits, you don't have a job, and you're looking, you need to put food on the table, and you see a sign at Target. Well, I can do this while looking for jobs. So, but yeah, so yeah, retail is not adding jobs. So that's pretty much seasonal hirings very poor. This is actually good news. Rents are falling nationwide, which is good. And I think one of the reasons Americans are struggling is the high cost of rent. So I'm a big proponent that in order for this economy to heal, housing prices need to crash. You know, there are some people that will be hurt, but who cares? At the end of the day, it's the young people that are suffering. And in order to build a nation, those people need a foundation. Part of that is home ownership. So, uh, the super wealthy and the people who are 50 and older, they have their foundation. So stop propping up asset prices and let the Gen Z kids get their homes. So, uh, and millennials too. I mean, the average home purchaser, I think, is like 56. It's absurd. Rental prices surge after pandemic, outstripping wage growth. Yeah. But recently, renters have notched a small win as in much of the country, rents are falling. Pretty soon it's going to be all of the country, but so look at this monthly rental on units up with up to two bedrooms fell 1.7% year over year. According to Realtor.com, they're now down 3.6% from their 2022 peak. So and look at this. Rents are falling, but cost of home ownership continues to climb. And that's the thing. I think property taxes, I mean, at least this is how my car tax bracket, their average price over the last 3 years. So if you get a big drop, you're not going to get much relief. And then until years later. So, I mean, don't quote me on that. Let's see. I'm just going to see how our property value assessed. Because I think they don't do that. Uh, I don't know. I don't know exactly. I don't know how. I don't know how it's done. Don't quote me, but yeah, I will. If you look at this, so yeah, a lot of things. So I think more people, they will be renting, and I think you're gonna see rents falling. Eventually, that will. In many metro, higher rents aren't likely on the horizon anytime due to aggressive construction, which I think this is one of the reasons. I think falling wages. Rents have dropped more than 5%, including Denver, Phoenix, Birmingham, Jacksonville, all of which added thousands of rental units. So Denver was one of them. I remember their rent was absurd. It was like, we're like, I used to live in really rich area of Virginia. And I remember their rent was like, oh, I got a job offer from Denver. I really wish I took it. But anyway, I didn't take it because I was like, they have a car tax. I was like looking at the rent. I'm like, what break do I get? I have to move. I was like, I thought rent would be at least $300 less or 400. I was like, I'm gonna get a break in rent. No, nope. I do wish I took it because I did see the property bubble coming, but it's hard to do. Hard to do. You know, one thing about bubbles, they can last longer. I didn't see it bursting so far, so. Uh, Apartments linger on the market for longer. Landlords are boosting incentives. Lately, offers of 12 weeks of free rent, 3 months, have been growing more common when 8 weeks was once the usual maximum. So now it's going, these incentives are growing more and more. Just lower the prices. Like, just lower the prices. Do that instead of having instead of 3 weeks. The thing is, they want to jack up rents next year. And the reality is, get rid of that business model. Like, seriously, if you're a landlord and that's your business model, you're going to lose it. Meaning, you're going to go broke. There's not many rich people in this country, and there's not many working class people. Start adjusting your business plan accordingly. That's why say on this channel, if you own a business, start lowering those margins, lowering them drastically. And they're like, do you have experience? Yeah. When I worked in precious metals years ago, we went in a bear market. I started lowering those margins that incentivize people to get off the hook, get off get off their butt and buy precious metals. And because they were scared, so you had to give them a good deal. Right now, people are scared of going into rents. They're scared to going into, so you got to give them a good deal. And jacking up prices and doing most people are up to that game or keeping no, just lower the prices instead of having these incentives so people can go there. And maybe you can raise prices a little bit more next year, but no, start learning to live with lower margins. So anyway, Pokemon cards crush the S&P 500. So the S&P is greatly underperforming a lot of markets, gold, Pokemon, among other things. So I found that interesting. Here's another thing, Red Robin, $6 million loss. And this will close 70 stores, 3,500 layoffs. But somehow we have created 100,000 jobs. So anyway, there's Red Robin. I found this interesting. We still haven't seen a crash in the high-end areas, but which I think will come. More than half the U.S. homes have lost value the past year. So this hasn't been this big since 2012. And yeah, and I mean, a lot of foreigners, they're not going to come here. I actually think starting next decade, we're going to see a mass exodus out of America. I've been on this channel how most Gen Z and millennial want to leave this country. And I think we're going to go from mass importation to mass leaving. And I think a lot of people are going to leave. They're going to stop coming. Uh, Falling for more than half the nation, biggest share in more than a decade. So there it is. 53% of homes in the country has lost a value. I mean, there are regional disparities, but they're eventually the big regions are eventually gonna fall. So Midwest and the Northeast, that's where still pricing. So buyer demand hasn't materialized, and it never will. So there it is. So the Denver area, 91% of their homes have dropped from their peaks, 89% from Austin, Texas, 88 from Sacramento, California. Of course, there's the Florida. That's really been. Few homeowners are taking big losses now. Well, they will eventually. So anyway, that's all. The home price eventually it's gonna. And the thing is, I talked about this a lot, but now Yahoo Finance AI companies need to start generating some serious income. Well, to keep up with all that capex, yeah, they absolutely do. So you can see what is OpenAI spending 1.4 trillion, yet it's losing billions of dollars a quarter. So anyway, you can see AI. I mean, I don't know exactly. Let's go into the markets. Wish there was like Europe, FTSE. I mean, there is Europe. Let's go to gold and silver. So, let's go to silver first. So I'm gonna go to silver and just give my two thoughts. It's just what I'm doing and what I think's gonna happen. So yeah, sorry, my computer's slow. Let's see if we can get a good, see if we can get a really good. So anyway, this is a chart, and if you look at it, the first thing is silver closed around 56. There is no resistance here at all. So I think silver, not just my opinion, not investment advice, could go up to 75, 80, or 90. I mean, if you look at it on long term, there's a big straight line, so I don't see, but this is a breakout, it going to 100 because of all the stuff I told you. It's deflationary. And if you look at it on a 5 year, it doesn't look, you can see there's a correction here, correct. And so I will say this, I have some plans in place. I'm pretty heavily exposed to silver, even though I sold a good amount. And like Avi Gilbert is one guy, he's still calling for a C wave down to $45. I'm gonna probably just my opinion, what I'm doing, not investment advice. I'll probably put 2 or 3K into SILJ. If it ever goes there, I don't know if it will, honestly. I don't really agree that much, but if it does, then I'm just gonna put 2 or 3K and let it ride to 60 or 60, 75, 80, 90. If it doesn't, then I'm just gonna keep that 2 or 3K and I'll be probably buying a place in Eastern Europe next year, so put it towards that or something. So I'm not, but if you look at silver, look at correct, and lower highs, as you can see here, just kept doing the higher lows, not lower highs. Higher low, higher low, higher low. But it spiked down and came back up. This is bullish if you ask me. And I wish I can do it stick like that, but I'm not. I think this is very good. Looks strong. I mean, it doesn't look on the long term, but I don't see a big. But I think this is a breakout. So, and the thing is, as I said, there's no resistance. Not one iota of resistance. Look at that. Breaks that high. It makes a high. Breaks. It does come back, and then comes back there, does a little bit, but comes back. There's no resistance, so no one really knows where it can go. And so I think around I'll be selling like I have targets. I have like all this. I have like hundred. multiple, like hundreds of ounces of silver. I'm going to sell at 60, then 75, then at 80, and I'll probably unload there because I do think when this runs over, there will be a bear market similar to 2011 to 2015, and it might be another 10 years till it gets back. I'm not saying that's exactly how it happened, but I think it's possible. And so there's silver. Then if you look at gold, they're sort of similar. Now gold, I mean the high is 4,400, I believe. Let's see where let's do five. We can do year to date. It doesn't yeah, it's around, so there are higher lows. So gold doesn't, there is a little bit, but if you look at this on a 5 year chart, it has just gone up. When it broke 2000, that was the amount. Let's see. When it broke 2020, there was no resistance, so it just kept going up quickly. And by the end of the year, it was around 26, 27. And then April, like 3,500. And then October, 44. My target is around 5,000. It could even go up more. 5 to 8,000 is where I think it's going to go. I'm going to probably around 47, 48, 4,900. Like I have some gold coins I'll probably just get rid of. And then I'm going to just start having trailing stops on my mining stocks. A lot of them. And we'll see what happens. So, and I'll probably be selling on the way up. Like if gold goes to 548, 49 or 5,000, I'll probably just sell a little here and there. But yeah, I can see gold going up more. Uh, so the only thing I'm really trying to build a position in is, let me see, is crude. And the reason why is I think we'll eventually, the next easing cycle, I think crude will unload. It's right now 58. I think this is West Texas, and not financial investment advice, just my opinion. We'll unload to 100 or 120. So anyway, that's all I have to say. Remember, nothing should be construed as financial investment advice. Just my opinions, thoughts on the market, what's going on. And I'll be doing more videos the next couple of weeks, and I'll see you next video. All right.